Big week for Solana as GSOL launches. This is an ETF that has been highly anticipated. We'll break it all down for you. Let's just get started. I do want to thank our sponsor today. That is Salt Lending. You guys can go out there and get your own crypto-backed loan by just visiting saltlending.com and get into a whole ecosystem of how to really leverage your assets. Also, one thing about Salt Lending is they've got this new program called Salt Shield. This, of course, is the no liquidation solution. It's brand new, so learn more. Use our link down below to get started. All right, let's get into it today. I want to bring back Zach Pandl, who is the head of research over at Grayscale Investments. Great to have you back, Zach. How are you?
Hey, Paul. Great to see you virtually. Doing great.
Excellent. So a couple of points we got to talk about, of course, is the big news, and that is GSOL. It's on the ground and running. You guys have a lot going on here with it. When you look at the Solana ETF as it is launched now, explain to our viewers and our listeners what this really means for Grayscale.
Well, first off, we are excited to have this ETF product in market today. We've been running this investment vehicle since 2021. So Grayscale starts these products out for accredited investors as a private funds. This is sort of their caterpillar stage, if you will, and today is when it reaches its final mature butterfly stage as an ETF. So what it means for investors, we've been able to offer investors access to Solana for a number of years already, but we're able to offer them in this most efficient product structure, the ETF product structure that is has the broadest investor access and generally is preferred by our clients. And so that's what it really means is, we've been able to offer Solana and been excited about this ecosystem for a long time. Now, because of the regulatory clarity that we've been getting, that we've talked about on your show, we're able to bring it to market as an ETF. It's a great outcome for investors out there.
One thing, of course, that is even bigger was the institutional staking rewards. We were showing that on screen. You guys are going to deliver exposure to SOL. This is the native token over on Solana. But what you're talking about is staking rewards that have historically averaged between 6 and 8% per year. This is accredited to the GSOL's total return potential. How does this work? How are you staking? What providers are you using? Can you go into that detail?
Yeah, absolutely. So Bitcoin, as people know, doesn't have this yield or this reward from staking from the product itself. That is sort of earned by external providers called the miners. But in the proof of stake category, which includes Ethereum, which includes Solana, token holders can earn an extra reward on top of their token by providing a service to the blockchain. So you're doing something active. You are staking your tokens, putting your economic capital at risk, and validating transactions on the blockchain, helping service the blockchain, and earning a kind of reward income in exchange for that service. So it's both something that's good for the blockchain and good for the investors because it provides an additional reward on top of your tokens. And if you're not staking, essentially, you're leaving return on the table. So very important that we're able to offer these staking rewards in our GSOL product for Solana, as well as in our Ethereum ETFs today.
Zach, how has this particular ETF performed versus what we've seen with the Bitcoin and the ETH ETFs for you guys?
Well, just day one, so I think too early to say in terms of things like flows and volume and investor uptake. But the Solana product has been one of our most popular private trusts, and I think it will again be very successful in this ETF format. In general, although it's not a kind of perfect comparison, I do think that market cap is a rough guide for how much investor interest there will be in these different types of products. So it won't be as much as Bitcoin. Bitcoin is a more than $2 trillion asset, so we should expect a bit more scaled down demand compared to that. But Solana, a really critical piece of the blockchain ecosystem or the crypto economy, however you want to refer to it, and I think it will see high investor interest as well.
I know you guys have a lot of other ETFs. We'll talk about the XRP ETF in a second, but before we go there, in terms of the staking unlock, what are we talking about here? What could be an exposure for, especially around the potential here for earnings?
Well, so Solana has a native staking reward rate that is around 7%. If we just look at the last several months, of course, it fluctuates up and down with network demand. When the network is quieter, when there's fewer transactions, fewer users, that can be a little bit lower than that. And when the demand is running high, the staking reward rate can be even higher than 7%. So today we're staking about 3/4 of the fund, and there's a potential to stake 100% of the fund at some point. So today earning around a 6% reward rate in this product. So enhancing the returns. If the price of SOL doesn't move at all, the underlying investor can expect to receive that roughly 6% return. So that's why it's so important. Even if your token's not moving in price, you're earning on your position.
Yeah, and this has been a big deal that a lot of people have been anticipating would be coming to these ETFs. Now it's here. So kudos to you and your team for getting this done in a time when we've had a government shutdown. So I don't know what kind of magic you guys pulled off there, but
very good attorneys, I think, is the key to keep these things moving, even while parts of the government are not in motion. But yeah, credit to Grayscale legal team for pulling these feats off.
So on the staking side, is this a plan to just kind of feather this out through different staking services like a GSOL, et cetera? Or will this be something that you guys are building out a staking product? What does that look like for Grayscale?
Well, I think both and is typically the answer with these things, and I think feathering it out, that's not a bad way to describe it. So today we are staking in the Ethereum and Solana products. Grayscale offers more than 36 different types of crypto investment products, most of which have some type of staking feature. And we are working closely with regulators to make sure that we can stake in those products effectively for investors and safely as well. So I think you will see much more of this throughout our whole product suite, both in the private fund side of our business as well as ETFs as we launch more of those, which I think will be relatively soon.
All right, so other news that happened this week, of course, was Western Union. Was big news for Solana. I want to go to a clip, and then I want to get your opinion on how this might affect maybe investors looking at Solana going forward. Let's go to Sot1.
If you're Western Union and you're already moving $100 billion a year across borders, picking a partner that does exactly that, fast, efficient, stable, and secure, is really, really important. And so we went and looked at most of the other alternatives and came to the conclusion for an institutional use case like ours, the Solana blockchain was the right choice for us.
All right, so you see Western Union, they're talking about this. They've been testing a variety of things over the years. They were even on an early test in 2018 with XRP. That got dumped. But I guess at that time, Solana wasn't really in the picture, but now they are. How does this change the narrative for Solana for this particular partnership?
Well, first off, let me say, a no-brainer from Western Union's standpoint. You have stable coins are the future of digital payments, digital dollars on blockchains, and stablecoin use in some sense will lift all boats in the crypto ecosystem to almost all boats, let's say. So all the smart contract platforms and different blockchains, whether it's Ethereum, Solana, XRP, and many others will benefit from stablecoin adoption. A great sign for Western Union, and in my view, kind of a no-brainer, to be honest, given where the industry is going, the payments industry is going over time. Look, it's a big win for Solana to have this brand name that already owns a lot of the relevant relationships. This is about using new technology to manage their existing processes and their existing relationships with customers that need to make cross-border payments, that need to send remittances, that sort of thing. So it's a great win for Solana. I think you will see more of this for Solana. It is a good blockchain for this use case and many other excellent use cases. And this is why it's so important to bring these ETFs to market. And I think you will see other blockchains also participate in the success of stablecoins, including the some that you've mentioned. So I think of it as a win for Solana, but also a lift all boats sort of trend for the crypto industry.
As you guys know, and I think everybody watching our show, the banking industry has pretty much held hostage the off-ramp, for anybody out there. So that's been a big problem with being able to get crypto to critical mass and escape velocity. Maybe now we're going to get there. Do you think these kinds of businesses, especially on Western Union, which has been a legacy business now starting to transact in stable coins, but if in reality everybody's got a global digital wallet that can transact in stable coins anyway, does that make that kind of business kind of obsolete in the future?
I do think it's reasonable to say that Western Union is sort of guarding their flank here a little bit. They have an existing cross-border payments business, and they're seeing competition from stable coins. So if you can't beat them, join them kind of philosophy seems to be what they're doing. And that makes a lot of sense to me. But I do think it's reasonable to ask that question. To what extent do you need these same sort of in-person services when you have other types of on-ramps, other types of wallets? I think that there will be a lasting use case to some degree because of the cash economy, which may require in-person presence in all of these different countries, and maybe that's where Western Union has an edge. But absolutely, they're seeing competition from stable coins, and so I think wisely deciding why not join in.
That, of course, has created a huge backlash between two major, I will call them cults, when it comes to crypto, because there's these factions. I feel like we're in Hunger Games sometimes, and that is between the XRP army and the Solana soldiers. I want to play a clip real quick for you. This is on TikTok. Take a look.
Zach Rector says that XRP ETF's live this week, maybe even tomorrow.
Live this week. You heard it here first.
Out of nowhere, those three get approved, but then XRP still delayed?
We in this bitch! The Solana ETF got approved!
Sorry, XRP holders. The delusion with XRP is crazy.
It is so over for XRP, guys.
Western Union build exclusively on Solana, not with Ripple, not with XRP. This is a basic fact. That's just a fact. That's not my opinion.
Western Union isn't going quietly into the night.
There is no bridge currency. There are stablecoins on Solana. You guys know XRP, that's its main mission, is to be the bridge currency. Now, is this going to be like the Drake and Kendrick beef?
That dump on October 10th fucking wiped everybody, and they are consistently dumping 9 figures a year of it on you. It's actually embarrassing.
But that's the kind of crypto scenarios that play out in this world, and we have to cover it. You look at all the narratives that have been pushed out there. Swift didn't pick up XRP. They went the Ethereum route. Western Union didn't pick up XRP because they're old and outdated. I'm talking about Western Union. Visa didn't pick up XRP because they want to control the world, is the way I look at it. Why have we not seen the XRP ETF launch? What was the reason that SOL went first and XRP's ETF did not?
Absolutely. It's a relatively simple answer to that question. And it's just that issuers like Grayscale were a bit further along with regulators on Solana than on several of the other potential crypto ETF products at the time of the government shutdown. And as soon as the government reopens, we expect to be moving quite quickly on the rest of these tokens. Crypto definitely has, all blockchains have passionate communities of supporters. And it's one of the things that I love about the industry is just how enthusiastic people are about the possibilities of each of these distinct pieces of technology. I come at this industry and this asset class from the standpoint of just investment markets in general. And I believe that it is quite reasonable to have many crypto assets in your portfolio and hold a diversified basket of these assets. We are proud to bring a Solana ETF to market. We're going to be proud to bring several other of these to market, including XRP. And we're happy to give investors our own views on things like valuation and fundamental trends over time. But it doesn't need to be necessarily one or the other. And certainly we are working with all of these different projects over time. So we're happy to kind of support the ecosystem and give investors some sensible guidance about portfolio construction and leave some of the tribalism to other community members.
Yeah, well, the tribalism is out there for sure. Okay, Zach, I want to go to this tweet right here. This was one that I put out. It was in reference to JP Morgan's estimates around altcoin ETFs and their forecast. They were estimating on XRP 8 billion in inflow, Solana around 6 billion in inflow. There's some big opportunities here between these two specifically. First of all, do you think that is in order, what JP Morgan is saying?
I think those are the right ballpark. We're going to find out. Of course, these are new products, and we're going to see what market demand is. I do think that they will be very popular, but we can absolutely scale to some rough sense to the Bitcoin and Ethereum ETFs, which we have here in the U.S. market, as well as to the altcoin ETPs that exist in Europe. This is about U.S. regulatory clarity and a change in U.S. products, but we do have these types of products in other areas, and we can kind of roughly benchmark these estimates. I think that those are potentially the right ballpark. I don't want to say for sure it's day one for our product here today. So we're going to see after the first few days of trading. But I think these numbers are approximately scaled to the experience of the Bitcoin and Ethereum ETFs and seem maybe in the right ballpark to my eye.
Well, I was just kind of curious because I'm trying to get more analysts to say, is this way out of line or is this in line? So without giving expectations, but because I think sometimes
I would say broadly in line.
Okay, so in line is the key, because I hear crazy things from Tom Lee all the time where we're going to get to a $20,000 ETH, and I'm still kind of trying to digest that some because I have a hard time getting there. But I always love to hear it. But just like I'm interested in hearing JP Morgan say, hey, we got 8 billion here and 6 billion there, which is great numbers.
To be clear, broadly in line in terms of potential inflows scaled to the Bitcoin and Ethereum experience. On price, that remains to be seen.
Sure.
I am optimistic, certainly, about the whole asset class.
All right, so I've got a couple other things here I want to hit on. One is if you look at the amount of allocation, and we've looked at your platform here in terms of your holdings, GDLC, but this is the breakdown here. So it's a 5 ETF holding basket. So you've got Bitcoin leading the weight at 75, almost 75%, and then right behind that, Ethereum. Then you're coming in with XRP and Solana. These somewhat weight according to market cap. Is this what you are proposing to investors when they come into Grayscale and say, hey, I want to package up some investments here? Is this kind of the model you're proposing to them?
Well, we speak to every different type of investor that you could imagine, from individual retail investors to the world's most sophisticated institutions, and they have a wide range of needs. But one of our key messages is that crypto is an emerging asset class, an important part of virtually every diversified portfolio, and you don't want to miss the opportunity in some bigger set. So there are lots of particulars, as your viewers know, in getting up to speed on blockchain technology and all these different assets, but you don't want to miss the broader opportunity. So an index-based approach has been a very successful way to allocate to different asset classes, equities, bonds, and many other things, and has also been a successful way to allocate to crypto. We've been running this particular product since 2018, and it has an excellent track record. I think for investors that don't want an overwhelming amount of complexity, want to make sure that they capture the crypto opportunity, capture the beta in their portfolio, that the Grayscale CoinDesk Crypto 5 ETF, or the ticker GDLC that you mentioned, can be a great fit. But there's so many different types of investors. That's why we have a broad product suite that we customize it to investors' needs.
I'm looking at the CoinMarketCap here, and there it is. You've got Solana setting at number 6, XRP at number 4. XRP holding a current market cap at 157 bill versus Solana holding it at 107. Do you think Solana can move up the chart here again? Because at one time they were above XRP in terms of market cap. What's your opinion?
It is a neck and neck race, I guess, for that slot on the leaderboard. I would just maybe highlight a couple of other things in there. I mean, what that kind of leaderboard shows me is, first, that the market perceives that the single most valuable attribute of blockchain technologies today is the store of value or digital gold use case provided by Bitcoin. That jumps off the page when looking at this. And the other thing that jumps off the page is stablecoins. Tether being very high on that list. Now, between the rest of them, there's intense competition. I don't want to kind of say that one will take the lead over the other for necessarily. I do think that Solana is a strong project and has a very diverse and rich on-chain economy. Lots of applications, lots of developers, lots of users, and that's why you can expect it to sustain its value and grow over time. So I'm thrilled to be able to offer that, or to be able to talk about our ETF product here today. And I think Solana is a very strong project. But of course, there's a very diverse range of things happening in that list of top tokens, from stablecoins to digital gold.
No doubt. I want to touch on one more point, and that is the narrative between AI and stablecoins. All right, you've got NVIDIA really kind of cruising through a $5 trillion model right now. You got Solana jumping into the X402. We had the Coinbase team on yesterday breaking this down, which is a huge opportunity in terms of agentic payments, especially in microtransactions. When you look at that, what's bigger right now, the AI narrative? I mean, NVIDIA is untouchable, it feels like, or the stablecoin narrative, which is just getting started. What do you think?
Well, that's a tough question. I think certainly in broader markets, it's hard to say that anything but the AI trade is the biggest thing happening in global finance today. In the crypto ecosystem, definitely stablecoins are the biggest story. And these things do intersect very clearly.
Yes.
In the future, we're going to have agents acting on our behalf, artificial intelligence agents, and they can't have a bank account, they can't have a credit card, but they can have an address on a blockchain and use stablecoins to make payments. So we absolutely think that AI-related payments will be one of the biggest use cases of stablecoins and a huge use case of blockchain technology in general.
No doubt. I'm going to end it today with Papa Fink, Larry Fink, coming in. He was at the Mega Finance Summit talking about how the world isn't prepared. And I want to get your opinion on this. Take a look.
You talk to central bankers regularly. What are the biggest concerns today of central bankers about what's going on in the global economy?
I would say the biggest question from central banks is, what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for bank payments? Payment companies like MasterCard and Visa. We're not spending enough time talking about how quickly we're going to tokenize every financial asset. A digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. Most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI.
All right, so ill-prepared. Countries are going to be ill-prepared for this. Zach, would you agree right now that are people that far behind the 8 ball here, or are we just drinking the Kool-Aid in this industry?
Well, the U.S. economy is incredibly dynamic, and I know we'll adapt to all these changes. But I agree with Larry Fink here that people will be astonished on how big these numbers get relatively quick. And it's partly just how small they are today. There are $30 billion of tokenized assets today, which sounds like a big number, but it is tiny compared to the $300 trillion plus of tokenizable assets. So it is a very, very small thing at its very, very beginning, and will be a huge part of our industry. So absolutely, we are not prepared for how big these numbers will look over the next couple of years. Maybe your listeners are prepared. I think broader investors and regulators still catching up.
It is kind of a situation right now, because the more we talk to traditional finance, as this market grows, it's drawing in TradFi, not only money managers, investors, businesses, technology companies, et cetera. And once they start opening up to really what's happening in crypto, the light bulb moment seems to come on. So it's intriguing that this is happening now. Zach Pandl, great having you on the show. Thank you so much for attending today. We appreciate it.
My pleasure, Paul. Thank you.
All right, you guys, you know what to do. Make sure and jump into our own Diamond Circle. That's our very own private group that you guys can become part of. It's absolutely free. Just click the link down below. Follow me out there on X at Paul Barron. We'll catch you next time right here on the Paul Barron Show.